Good morning, good afternoon, good evening, depending on your time zone. This is your host, Dr. Peter. I just want to give us this extensive analysis on dollar yen. It's an extra that I'm poised to give you, and for you to understand how wave analysis works and structure. There is an extra tip for you. Now, this is the monthly time frame. I had to zoom this in completely for you to see the way we analyze. After this move, the data not captured before this 2003 here, but after this low in 2012, then we had seen dollar yen, gain traction to the upside in 3 waves. So the 3 waves we have seen, it's this one as an A wave, this pullback here, or correction, big correction here on the monthly time frame as a B wave, and now we are seeing this happening, and we believe that this C wave is completed, and we are correcting from here on the daily time, on the monthly time frame. So it's a zigzag to the upside, as you can see. It has taken so many years, right from this low here in probably 2011 till date, and that's about 14 years that we had seen this rise to the top. Now, these pretty much had gone up in 5 waves, very sharp 5 waves to the upside, and 1, 2, 3, 4, 5 here, and we had this correction to the downside. Now, in this corrective mode, then we had seen also what looks like a 1 and a 2 and a 3 and a 4 and a 5 here. And so I want you to pay attention. You can watch this over and over for you to understand what I said. Again, the A wave, the B wave, and the C wave. So in the C wave, we had a wave 1, which is an impulse, as you can clearly see here. The corrective wave pattern, which bottom here as a wave 2, then a wave 3, a wave 4, and a wave 5 here. Now, we can see the ending structure here, which is the ending diagonal of this, the last 5 waves here. Now, within this wave 3, we can see the first move here as a 1 and a 2 and a 3 and a 4 and a 5. So the ending structure here clearly shows that we have, like, if you have to go to pick a wave 3 here, you can see 1, 2, 3, 4, 5. That's the ending structure, as you can see clearly. Again, 1, 2, 3, 4, 5, the ending structure. Then we are correcting this wave. Now, this looks corrective so far, because we are yet to break these. And usually, if we are correcting to go higher up, we shouldn't expect this correction to break the low of this primary wave 4 in this area, primary wave 4. So 127 area is an area we have to watch. A break below here will signify a bigger correction coming in for yen dollar, but that's still a long call from now. So we have to see these. The first wave of correction, which is sharp, breaking the 4th wave here, which is around this area, is sharp enough. Then we are seeing an A wave, probably a B wave, and the C wave, the emergence of C wave is what we are seeing. Now, from the upper time frame, we still call that there's going to be a sell. This correction looks incomplete, and the price action, the mood on the upper time frame still tells us that this is the place to break now. But are we going to come down right away and continue with C of this? So you can see an A wave, a B wave, and a C wave in the making. And this wave, C wave, because it's the largest wave, can also give us an A of C, a B of C, and a C of C. And that is what I think it's unfolding at the moment. Then with this price action that we are seeing here, a rejection, and the correction to the upside, and this engulfing candle in this area, which is the third bullish candle here. And we're in the middle of this month, August 2025. And I still see the price still going to break the top before we come down. How do I know that? It's until we begin to scale down into the lower time frame. That is when we will now see that most likely this is still going to break to the upside slightly before it comes down. So let's now switch to the weekly time frame. On the weekly time frame, what can we see? Now we can now see that this is probably the leading diagonal or ending structure, which is the 1, 2, 3, 4, and the 5 that we talked about. We can see that clearly. Now, this is the first push, which is the A wave, and we believe that B wave is completed, and we are within the C wave. This is the first thrust down on the C wave. Now, this is where it gets interesting. Are we completed the move to the upside? Are we coming to the downside? There are things you have to look at that would help you, because it's not only, the way it will count a structure, it will count a structure. And, there are Fibonacci levels that price will hit before, it backed down or it backed up or it moves up again. But there are moods that I'm capturing here. The first is this mood on the weekly time frame, this candle. This candle shows reactions and tells me liquidity still exists above. When you see that liquidity still exists above, and before you know it, the price went up to grab liquidity. Seeing this again occurring here, if I see more of an engulfing candle to the downside, I would say they are done grabbing liquidity, on that side. So with these, the seller is the mood at the seller, because it's actually falling. If it's like he's buying and we are seeing this, probably he's buying and we are seeing this, okay, we'll understand that. But when the sellers are trying to force price like this and it's giving us a week, and this price action still tells me, don't be surprised when you see price go up more to grab liquidity before it falls. I still believe that the B wave in between here is not completed. So that is the mode here. So we have an A, a B, and a C. And so within the C, we have A of B. We are within the B of C, which is not completed yet. There's still this liquidity grab that I'm seeing at the top here. So we need to now dissect the inside of this wave in itself to know where it's going to get to, and probably where this is going to get to. I don't see this breaking here now. So if the price should break 142, then it means that we are coming to the downside. We are coming to the downside. Hello, I will call you shortly. So the price will need to not to break this low before we push to the upside. Now, in trying to now understand the B wave, we can see this as the A part of the B wave. We can see this low here as the B part of the C wave, of the B wave of C. Interesting. The A wave of C. Now we are dissecting the B wave of C. So the A wave of that B, the B wave of that B, and we are within the C of that B. And when we are done with the C of that B, then we are ready to do a push down of the last C, which we now expect that is going to travel in 5 clear waves, motive wave. Now this is still weekly time frame. A of C, the B of C, we are within the C of C. Now within this C of C, because it shows that the A wave of B is completed, the B wave of B is completed, but the C wave of C is not completed, because we expect that to also give us a clear 5 waves to the upside. So it may just look as if this C of B is also going to run in triad. An A of C, a B of C, then we're going to have a C of that C in clear motifs waves. You are going to definitely, look this and, play over to understand all that I've said. Now, let me do something and just bring out my drawing for you to gain more clarity so that it won't be an abstract. So an A, a B, and A, C wave, which is going down. And this is the fourth wave. This is where we feel like, okay, the price is going to, we shouldn't break, okay? This is where we think we shouldn't break. Around this area, we should be getting a push. But from the correction, of course, we expect that this might actually tick 1, 2, 3 to the downside. 1, 2, 3 extension of A, B, and it looks like this is going to break 100, and we will probably sometimes come in here around this area to expect a bounce back to the upside. But having said that, this is what I've been, pitching now, that the A wave, the B wave, and we're going to go and do a C wave. Now, within this C wave, that is where it gets interesting. So let's quickly push to the daily time frame for you to see what I'm trying to say. I honestly think that the price, if it wants to go down, should not break 154, or let's say 155, if it wants to go down. Why do I say that? The move down here is an A wave of C. A B wave now is what we are in the blue. A in the blue, a B in the blue, and I don't think we are going to hit 156, 400 area. I don't think so, because that will be a limit of 168 here. Like an A, B, C to the upside, that will be a limit. So already we have tested an 100 extension. This is 123 extension, which is most likely place that the price is going to, back down. So I still expect price might get here without breaking this area. If it breaks, not beyond it, but I don't see price breaking this means it's impulsive, it's bullish again. So this area, this is a big confluence for price to return and start selling, but I don't think they are ready to sell yet. Now, within this structure of an ABC of A and a B wave here, then we are seeing this push of the first move of a C, which is A of C, probably a B of C. Then within the C of C, we are seeing this as the first push. And the internal structure, I don't think is completed yet. So I can see that after this move, in that B of C, so we have an A, we have a B wave, and probably we are going to see a C wave here to complete that B. Then we have aggressive wave C to the upside. That is what I'm expecting from this configuration. So how do I know that? After this push, like I said, this C wave, in a very corrective manner, they have the B wave is what looks more complex. You have to understand C wave is usually very aggressive, when it's completed really. So in the B wave is where we expect, you can see this A wave here in 3-wave format, then the B wave came down here, but within this B here, it's where we are looking at. Then this move, then the A of that, then the price went up. Probably A of C, then we are doing a B of C here before we do a C of C in this category. So the first retracement here, and the first push, and this is where the rejection is. If you look at it, on the little time frame, you would think it's an engulfing candle, but when you look at it on the higher time frame, that's the mood captured here on the weekly. It's a rejection that tells me, you can see it here, we still have liquidity building up here, just like we saw here. So you need to scale down from higher time frame to lower time frame to understand how this thing probably works. So that's the liquidity here. And I still believe this is going to go up, which now means that within this frame, we have done an A here. We are definitely in the C wave because this is an A. The B in the middle is completed. This is the B in the middle is completed. So this is an A wave of that B. This is B in the middle, which is completed. Okay. Then the C is what we are doing here. So we still believe that C needs to grab a bit of liquidity to the downside, as instructed by this candle here. You can see this bullish candle on the daily time frame still tells me there are liquidity to be grabs here. That's how to actually understand liquidity with your price action and all of that. So liquidity still to be grabbed below here, and liquidity on the daily time frame up here before we return selling. So not until we break here. So 142,700 is we have to break to say, okay, we are coming down again. So this is the first wave of A. And then within the B of C now, the last C, so we have an A, we have a B, and this sharp return. So from here to here, it's about 168 extension to the upside. It didn't break that, so I will expect an extended flat here. So like an A, B, and a C, and extended flat. So within this C now, to give us an extended flat, we have seen an A wave, then the B wave of it. That is where it gets interesting. The B wave of it is where it gets interesting. So we need to see more correction to come down to an area, probably an extension of 161, 123 or 127 area. We should see a bounce before we go up. Now, with that, let me bring out the drawing again. So for you to understand. So on the 4-hour time frame, we need to complete C in the white to bounce up. So an A and a B in the white, then the C in the white around this area, around 144,600 area, maybe 144,650 area, we should see a bounce to the upside. Now within here, now we have an A, we have a B, then we are going to do a C. Now within the C, now we'll now see a clear 5 waves. And within that clear 5 waves, probably within that C here, which is the large purple, see in the purple, we have an A, we have a B. In this is a violet now, then we'll now do a C here. So I believe maybe this is going to grow into 5 waves, maybe a 1, a 2, a 3, a 4, a 5, and we should be seeing, a reaction at the base of this trend support. At the base of this trend support, we should be seeing a reaction. So if I want to look for, I don't want to sell, I want to look for, still want to look for a buy around this area. So if I get a buy around this area, probably my stop loss will be waiting around this area to see what price is going to do. So what a break below here means we are bearish again. So I still expect price to walk between how many pips? This area. If we get a push from here to the upside, that's about 800 and something pips. I still expect about 800 pips, from here to the upside before we fall. And that will complete an A, B, C structure of the blue in the B in the blue, and before we begin to fall. So with that, I've come to the end of that analysis, extensive analysis on yen, dollar yen. Do like, comment, share, subscribe, send this link to your friends and loved ones to also subscribe to this channel. Thank you.